Good afternoon. I'm still reporting on the economy from Los Angeles. So about 5 a.m. this morning, LA time, a friend in Ireland emailed me that there was a conference starting in about an hour at the Philadelphia Federal Reserve, where top academics would be discussing ending fractional reserve lending. Well, I didn't believe it, but since there was a streaming live feed, I tuned in. Soon my jaw was hitting the floor in awe. Real live academics were, for the first time that I knew of, actually taking an honest look at monetary reform. The first two speakers were great as they examined alternatives to the current system of basically taking the money power away from the commercial banks by one means or another. As soon as I can get my hands on the video, I will put it up on this channel. But then Professor Jeffrey Sachs from Columbia University in New York came on the screen. He was too busy to attend the conference as he was in the middle of dealing with a pack of outraged European bankers who were in New York to vent their anger at how the American banking community had deceived them by selling them bogus, toxic assets. Sachs took no prisoners in his off-the-cuff presentation. He lit into the American banking community full force. I scrambled for some recording device to capture at least the audio. All I could find was my trusty iPhone, but that was good enough to get the flavor of it.
I think, your point, Larry, is a very powerful one. And at a not a literal level of single-purpose banking, but of a more general level, Glass-Steagall successfully did that for quite a long time, and its removal was a very, very cynical play by Rubin, Summers, Clinton, Graham, and others who all had very strong interests, personal interests in the outcomes of that deregulation, and exploited the gaps that they created, and then, to the chagrin of some of us at least, were invited right back into the White House in early 2009 after they had made this calamitous mess, to be the ones supposedly to fix it. And I know that Summers, for example, continued to really institute moral hazard policies right and left by fighting against any limits on compensation of these people who had entered into the breach. So this is a case where institutional reform of separating fractional reserve banking and basically the provision of liquidity from gambling should be done. But I would add this other point, which is that a lot of what's happened actually and what's been revealed is, in my view, prima facie criminal behavior. It's financial fraud on a very large extent. There's also a tremendous amount of insider trading, and you can even watch it when you're living in New York, how that works. So it's not so mysterious, but we don't even act. I take John Paulson, for example. Paulson worked together with Goldman Sachs to defraud massively many European banks which bought the toxic mortgages that Paulson had put together. When this abacus deal was taken up by the SEC, Goldman ended up paying a small fine. The chair of Goldman, of course, continued in his position and continued at White House state dinners. And Paulson wasn't even mentioned once in any of the proceedings. He took home a $1 billion paycheck the next year, even as Goldman was paying a roughly $700 million fine, if I remember correctly, for the abuse that Paulson was part of. I can't believe, no matter what the financial regulations, we can't do better than that. That's really pathetic.
As a former congressional staff attorney, retired tax lawyer, looking at the possibilities of small steps that might be taken, how affirmative would you think reenactment of Glass-Steagall would be?
I think that it is quite important to recreate a mechanism where liquidity is separated from large-scale financial gambling. It's really, in my opinion, as a macroeconomist, it's the collapse of liquidity that is the real macro danger. The rest is the collapse of confidence, lawlessness, decency, and so on. But what made Lehman so damaging, of course, was how it infected the money markets, the interbank loans, and the complete drying up of commercial paper. This was the devastating effect. It was basically March 1933 replayed. So liquidity is what is the real value here from a macroeconomic point of view. Loss of wealth, I could care less whether they make more or less money. I don't even care whether they make big money particularly, except I think a lot of them are crooks, and that it's based on a lot of nefarious behavior. But the macroeconomic significance is a kind of Diamond Dybvig banking crisis, which we know to be part of a fractional reserve banking system. And it seems to me, analytically, we have basically two levels of decision making. One is separating liquidity in the banking sector from other kinds of speculative financial activity. This I would do for sure. And I would never have put Goldman Sachs back under the Fed's protection as a banking unit so that it could receive direct loans from the Fed. That's ridiculous, and sad, actually. But the second point then is Larry's point, and this is whether fractional reserve banking itself has value enough to keep it in its current form. I'm not convinced, I have to say, one way or another. I'm kind of, grew up in a fractional reserve banking system. I do believe that it provides liquidity in normal times if regulation is good. I tend to believe that there is value in reserve banking, but it's also highly volatile, as theorists have recognized at least for 150 years. And as Milton Friedman agreed, as Diamond said, as Larry has pointed out, and I think we have the choice, could we really have liquidity without fractional reserve banking? If we could, we might be able to address, another degree of this problem. The final point, of course, is separating the politicians from the crooks. But maybe that's so close together that they can't actually be separated. Maybe it's just the same community.
Yeah, hi, this is Michael from Hong Kong, one of the presenters this morning, Chicago time. I added a question, but I just wanted to say it is possible to separate liquidity position from credit position. And that's what the Chicago plan is all about, and I think that is definitely right. My question was, your international experience, you were starting off by saying you're talking to a lot of international decision makers. What is the sense there about the readiness to try different monetary and financial approaches to what we have today? Do they feel that they could start to do that on their own, in their own countries, or do they feel that they depend on the center countries like the United States and the Europeans to do something first?
I think in general for most small countries or most developing countries, I'll put aside the very largest ones, there is a sense of almost complete dependency on the international system, their payments, their lines of credit, interbank markets, the need for swap facilities with the Fed or the ECB, the pervasiveness of tax havens, the extent of flight capital from their countries, the legal structures that where basically very clever U.S. lawyers help to free all of these countries from their tax revenues. They feel very much dependent on a system that they feel is dysfunctional, but they've been well schooled that for the last 25 years their goal is to be part of the international system. They just woke up to a system that they find very destabilizing, and they don't see any clarity of the way forward. And most of the advice that they get is to be part of the system and be quiet, basically. This is how the system is. You join it. You stay in good terms with the Fed, with the IMF, with others, and there is very little sense of autonomous potential among these countries. Really, I can only emphasize the palpable anger and vulnerability that's felt right now is very, very high.
My name is Dennis Peacock, and I represent the faith-based side of macroeconomics. And I just want to congratulate you that you pulled us back to the reality that in spite of all the complexities and theories and mechanics that we deal with in economics, that economics is really about values and the values and ethics of people. Thank you very much.
Well, thank you very much for saying it and practicing it. I do believe, by the way, I'm just going to end here because I've been pulled. I have to run to the UN, in fact, right now. I believe we have a crisis of values that is extremely deep because the regulations and the legal structures need reform. But I meet a lot of these people on Wall Street on a regular basis right now. I'm going to put it very bluntly. I regard the moral environment as pathological. And I'm talking about the human interactions that I have. I've not seen anything like this, not felt it so palpably. These people are out to make billions of dollars, and nothing should stop them from that. They have no responsibility to pay taxes. They have no responsibility to their clients. They have no responsibility to people, counterparties in transactions. They are tough, greedy, aggressive, and feel absolutely out of control in a quite literal sense. And they have gamed the system to a remarkable extent, and they have a docile president, a docile White House, and a docile regulatory system that absolutely can't find its voice. It's terrified of these companies. If you look at the campaign contributions, which I happened to do yesterday for another purpose, the financial markets are the #1 campaign contributors in the U.S. system now. We have a corrupt politics to the core, I'm afraid to say. And no party is, there's not both parties are up to their necks in this. This has nothing to do with Democrats or Republicans. It really doesn't have anything to do with right wing or left wing, by the way. The corruption is, as far as I can see, everywhere. But what it's led to is this sense of impunity that is really stunning, and you feel it on the individual level right now. And it's very, very unhealthy. I have waited for 4 years, 5 years now, to see one figure on Wall Street speak in a moral language. And I've not seen it once. And that is shocking to me. And if they won't, I've waited for a judge for our president, for somebody, and it hasn't happened. And by the way, it's not going to happen anytime soon, it seems.
Professor Sachs, thank you so much.
I'm still reporting on the economy from Los Angeles. Good day.